Many companies increased their output in 2010 when the economy rebounded. That pushed up the demand for power. The higher consumption raised the value of electricity sold last year to a new high of $8 billion. That's a 24% jump from the previous year. The record could have been higher, but it was partly held back by a strong Sing dollar.
The factors that drove that was, I think, the unprecedented economic recovery that Singapore saw, the 14.5% increase in the economic growth, but also the impact of international fuel oil prices. So during last year, we saw WTI prices rise by 29%.
Last year, the strong demand pushed up the average wholesale price to an all-time high of $171 per megawatt per hour. That's 16% higher than the previous year. And that could continue to rise this year in line with oil prices.
But the key thing for us is to ensure that we have available supply coming on to meet that demand. And the good news is that there is a lot of new repowering projects and new build projects already underway. So that will ensure that Singapore has efficient generation that can be offered into the market. The more efficient generation that's available to us as a market to draw from, the more that we can contain the impact of increasing fuel oil prices, should that continue.
Around 80% of Singapore's electricity is generated by power plants running on natural gas. And most of this is piped in from Indonesia and Malaysia through long-term contracts, which are closely pegged to the price of fuel oil. But Singapore could become less dependent on that when its liquefied natural gas terminal comes online in 2013.